Hello, my name is Radek Kwiatkowski. I'm investment associate at the Flashpoint Secondary Fund, which is part of Flashpoint Group. First, I would like to welcome our viewers. I hope you can see and hear us good. And I wanted to thank you for finding your time to join and give us some attention. This event, we would like to be part of some regular discussion that we would like to host in the future called Saas Lounge. And today's discussion we would like to revolve around the question, why and how can startups thrive in a slower economies? I'm happy to welcome our guest. So maybe let me introduce them. With us today is Stas Matviyenko, founder and CEO of Allset. Stefan Batory, CEO and founder of Booksy. And Alexandros, Trimis, CEO and co-founder of Welcome Pickups. Good to have you here. I think we just lost Stefan. I hope he will just reconnect in a second. Let me maybe in a couple of words say what I would like to ask you guys today. So your startups till now have been successful. I mean, you exist for some time, you are in a growth stage, so you see the last couple of years, you witnessed some unprecedented volatility, some black swan events. COVID shut down overnight the whole industries. And we saw some extreme regulatory or policy moves as answer to these events that impacted VC markets. And I wanted to understand from perspective of a founder, manager, and a leader, how you made the decision, how you to survive and thrive in those kind of environments, and also how you communicated both internally and externally, and how you communicated also with your investors. So I see still we're missing Stefan. I hope he will join, but I think we can jump into question and hopefully he will join in the meantime. So overall, about the strategy and tactics first. So you raised capital from VC, so you are in this long-term VC game where seemingly growth is the most important factor when you're assessing if were successful or not. But on the other hand, in slower economies, everyone is concerned about the runway and saying cash is the king. So what's your take? Is it worth making sacrifice of some of this growth for your profit during downturn and slower economies? So maybe Alex, would you like to start?
Sure. I mean, I believe the main question is how much money you have in the bank and how much you can keep on, funneling growth and pushing for growth under this environment. I mean, as long as you can do it and you have a big enough runway, it makes sense. But like if you are more cash stressed, like your runway is lower, like you can see a point in the future where you're not sure, like it's better to focus on profitability to make some moves sooner than later to tackle that area. I mean, I think it's company focused, and for COVID, I think it was very abrupt, and it was mandatory for everyone to try to survive and focus on profitability rather than focus on growth, especially in travel.
Okay, Stas, maybe you would like to add something?
Yeah, definitely. As we're mostly kind of have a team in Ukraine. In our case, you can add war on top of that, and we've been impacted significantly. COVID as well. We're in the restaurant industry, so for us, all this is already normal life. Like, okay, well, that's good. The only difference in decisions that we did is instead of continue using OKRs as before with 3 months planning. We actually switched back to KPIs, month-to-month results and goals divided by teams, which also help us to change focus. And now we kind of sacrificing growth vs unit economy and burn rate. We actually did cuts around 30% of our staff. And at the beginning, it was a bit painful, but now we definitely see some gains because we are more confident and we're not begging investors, hey, we need money. Right now, we actually see really good finishing. We actually see really good rates in terms of retention, better unit economics, better cash burn numbers, and all this actually right now I like more than higher growth but much more risky way. So right now we're growing not as fast as before, but we can show that hey, with money we can grow faster. But here's the time where we actually need to sacrifice growth to have more cash on the balance sheet, and actually I like it more. It's you're not running, but you're more smart, more thoughtful of your future, and this is less risky. So it actually opened a lot of interesting opportunities for us.
Okay, Stefan, thank you, Stas. Stefan, I asked the question. You raised capital from VCs. You were probably historically most concerned about growth. Do you think in slower economics makes sense to focus and make this trade-off between growth and profit? So you're focused a little bit more on profit now.
It definitely does. We raised our last round 2 years ago, and it was a totally different environment. In fact, up until 9 months ago, it was all about growth at all costs. All of our competitors were pushing really hard, and we had to push really hard too. In our case, it's a winner-takes-all dynamics. So we either win or we are gonna die. But since all of our competitors started slowing down and they are not breathing down our neck anymore, it allowed us to refocus and shift gears from growth to cash efficient growth. And that's how we are looking at that. So definitely we have more focus on unit economics, cash efficiency right now. But like one thing I really like, it has forced us to think really hard what is really important, because like when everybody is running like crazy and throwing money left and right and burning it, and you have to keep up the pace, because if you're not the first, in our case, you lose. We didn't really have time to think what is important. And the last 3 months, like we spending discussing it and having more focus. And Stas said that he's already seeing improved retention and unit economics. We just shifted the gears a couple of months ago, but I'm pretty confident that in the coming months we are gonna see exactly that. And I think we'll also make smarter choices. Like we need more time to prove that, but I have so much confidence that 6 months from now we'll be in a totally different and a better situation we were before.
Okay. And when it comes to, let's say, your product and strategy, so I mean, we can maybe start with Stefan, you to continue. So when market is that volatile, you usually have some long-term vision about. I mean, before market gets so volatile, you usually had some vision where you want to be, how your product you want to look like, etc. But then. Things happen. And do you think it makes sense to be more tactical or even make some strategic decisions on the flow? Or you think that even, market change, you should stick to your, previous decision because this is what you believe in the long term? So, I'm asking about this general trade-off on the product organization, etc., between long and short term.
Well, I generally believe that life and business, it's a balancing act. And as a long distance ultramarathon runner, I learned how to have this long-term goal and the long-term vision, but at the same time focus on getting to the next checkpoint. So, and again, it's a balancing act. Like sometimes you zigzag, sometimes you make mistakes, but more or less you need to know what direction you're going. You need to have that long-term vision. But as I said, I think, the environment has changed and it has forced us to change how we look at our decisions and how we deploy capital and we deploy our resources. And now it feels like we made a lot of mistakes in the past 2 years, and we got distracted and we started chasing, many opportunities, and having limited resources. I think at some point it's good, because it lets you to think like what is really important. Like we are not changing our long-term vision and long-term strategy, but we are changing our strategy how to get there. So we are now having definitely more focus, and I believe that we started making much better decisions because we think through those decisions, and we created a better process, a better framework to make those decisions now. When capital was cheap and easily available, it was easy to throw money at problems instead of solving them. So I think that that's something that has changed internally and definitely in my head as well.
And maybe Alex, what is your take on that? Your business as well, for example, COVID shut it down like almost overnight. So you needed to pivot in some way. Yeah. So like, what were your decisions then, and like what to keep focus and, how to divide resources?
Yeah, I would say like 3 points. Like the first one is, like, you have a product market fit or your product vision, where you're going. I don't think this is changing for the long term. And like during a crisis, you might lower your marketing budget, you might lower your sales budget, you might lower some other components. You might need to create efficiencies in the organization. But I don't think you should change course completely and take the company to a different direction because of a like short-term obstacle. Of course, like for us, it was dramatic. Like we went from 80% growth to 95% like loss. So we basically closed within 2 weeks when COVID hit, because all airports closed. We had no way to get our product to customers. And that led a lot of free time for us to think and think what we should be doing and where we should focus. And we focused a lot on efficiencies. Like the second point is that you need to take advantage of the crisis and see how you can improve your efficiencies, and product helped a lot during that period in order to create better efficiency. So a big efficiency was manual actions from the team. So we tried to automate a lot the product, to automate the processes, to make it like the cost base, to lower the cost base, especially the variable cost base. So this was a big focus. And apart from like efficiencies and that side, the third point is that we had to unite the team towards a new goal, towards something more positive. So we took, let's say, what COVID, like the overall framework of it, and tried to create a new product within like our spectrum, just to have a positive, let's say, direction for the company, while we had our Phoenix plan, which was survive and thrive afterwards after COVID. So it was a mix, but I don't think product market fit product direction should change. If you have some time left and you want to do something, like you can work on something more productive, but like the main direction should stay, and you should take advantage of the crisis and downtime to optimize everything within the organization so you can be much healthier after the crisis.
Okay, yeah, makes a lot of sense. And Stas, what do you think about this? You were also in the more or less same situation, and you needed to roll along? I mean, be a little bit passive in terms of what you can do and product market fit, or did you try to keep your long-term vision?
So for marketplaces, it's increasingly hard to test, grow, and actually survive without investments. However, in our case, we didn't have any other choice other than shut down all the expensive channels and focus on retention, focus on unit economics. And instead of growing through new channels, the whole product team switched to retention, improving retention, or reactivating customers, or engaging with existing customers. And kind of new growth opportunities shifted from, hey, let's simply acquire, to, hey, well, let's see what we have and how we can improve that. It's going to be much cheaper. Probably it's going to be less faster. However, it opened up a lot of kind of motivations for the team to try this. And actually, it improved the product. We started thinking on not how to simply grow with the money, how Stefan said, but we decided, but we became more smarter about how those customers can be retained, how we can make our product better for them, and why they're actually churning, how to fix churn. So it actually, in our case, helped a lot. We understood a lot of interesting things, and the whole product simply became super cautious about retention. Number one thing that whatever you build in it, which is not impacting retention, freeze that. Whatever is helping to improve retention and churn rates and decrease acquisition cost, let's do it. Let's focus on that. And actually, this has shifted understanding, focus, and long-term vision for the company as well. We didn't even know that actually you can grow that way. It's much cheaper and even not that less slow, or it's not even slow growth. Even like it's all can be adjusted with much less investments. So product-wise, we simply focused on much cheaper ways or even free ways to grow, and retention became a king for us.
Okay, yeah, makes a lot of sense. I understand. So, and I think you touched this in several ways, but to maybe to like try to summarize this a little bit. I understand, startups don't have big balance sheet. They're usually horizon, they have capital is fixed. But on the other hand, there are more agile organizations. So they can, use opportunities that are created by the market, the slower economies. So what general opportunities do you think slower economy creates for startups? Maybe Alex, would you like to take this first?
Yeah, for sure. Again, for me, is to not leave a good crisis go to waste. And for me, in a down market, you really need to see your cost base, how you can better manage your cost base. The second thing is it's an opportunity to clean up the employee base and make sure that you only have A players, because when you are in hyper growth or you are having a lot of money, you need to hire fast. In a slower market, you can clean up and make sure that you reinforce the A players. You can look for P&L efficiencies across the board. So this is a great opportunity to do that. You have the opportunity to revisit your distribution mix, how you're acquiring customers, making sure your CACs are under managed. And there are some opportunities to hire great talent, because some great talent might be off from some other companies. So in down markets, some good talent is released and there's an opportunity for you to grab.
Okay. Stefan?
Well, I think one of the biggest advantages we have as startups is that in most cases they are run by founders, by entrepreneurs, comparing to bigger companies, corporate offices, like when people play politics, when people are slow to move, like we have a chance to move fast. We have a chance to adapt much faster. And I think, that's one of the reasons why startups can thrive in a downturn, because we can adapt much faster, because we are entrepreneurs and we see opportunities. As Alex said, like never let a good crisis go to waste. And bigger organizations, they simply move, they don't move fast enough to either see or those opportunities or to take advantage of them. So I think it's also, a mindset issue.
Okay, Stas, do you have anything to add to this?
Yeah, as Alex mentioned, simply it's a good detox time for a company. You can definitely clean up a lot of things that you didn't know actually you don't need. You can improve your unit economics, most importantly, and actually you're getting out a stronger company, much stronger company. Yeah, you might be growing a bit slower, but you're getting out as a stronger business overall. And hiring as well. I totally agree. You can go and hire much better talent during this time, if you have cash. If not, definitely a good time to clean up the team and leave the ones that really do have impact on your growth, on your numbers, what's really important. There are a lot of opportunities actually to cut cash burn that you didn't know you can, you don't need it. So to reflect, I would say detox for the company and reflect. It's most important as things that you can use and become a stronger company.
Okay, and maybe swiftly going to the second part of the discussion, because you mentioned there are those opportunities, but some of them, are not so easy to make or communicate. So maybe, the thing I wanted to understand is what do you think about, how transparent and how to communicate internally and both externally those kind of decisions? Yeah, this is something I'm always interested, because when, everything is growing, everyone is happy, and it's easy to tell the good story, yeah. But like to communicate, okay, we need to freeze our hiring. That's not something easy to communicate, both internally and externally. But like, and then how transparent about this is. So what do you think, Stefan? If you want to start, maybe.
So we had two layoffs, one that happened just a couple of months ago, and the one before was during COVID. And in both cases, we chose to be very transparent. I believe that transparency is the key to keep the team morale and to make sure that we retain the best talent, the A players. Like if you communicate very openly and transparently, and if you show the team the vision, how to get out of that situation, and if they trust you, the best guys are gonna stay with you. And if somebody leaves, then that probably means you didn't want to have them in the first place. So that's how I'm looking at that. That it's a self-cleansing process partially. Like first, like you lay people off depending on what criteria you choose, whether you close some markets or some teams or the lowest performers. But then there is that second round that happens, not because of your decisions, but because of the team's decisions. And I think it's actually a good thing for the company. Like if people don't believe in the vision, then you didn't want to have them on your team anyway. That means they came for wrong reasons. You either overpaid them, or they just wanted to pimp up their resume. They wanted to put your company name on their CV. And again, it's not a good reason to have somebody on your team. Like you need to have motivated people that trust you, that share the vision that you have. And I think transparency addresses because it helps you to take care of those that want to stay with you. It helps you to to build trust and to strengthen it. And that's the best way to come out of that crisis even stronger, because then you know that people that stayed with you, they have your back, they know you have their back, and that's how you build really strong teams.
Okay, and externally, I think you made a press release. You were also very, transparent externally about this. So I understand this is also your strategy to communicate this openly.
Yeah, we chose to be transparent both internally and externally, because not being transparent, that creates rumors and that creates opportunity for people, to stir up the shit and, to poach your people. Like if you are aligned both externally and internally, there is no space for anybody, to drive a wedge between you and your team and the market.
Yeah, makes sense. Stas, do you want to take this?
I totally agree with Stefan. In any relationships, you cannot be you cannot motivate people or get their trust without transparency and honesty. And actually, downturns, layoffs, it's a good opportunity for you to show how you treat people in bad times. So when we did our layoffs, we actually were super transparent externally and internally, and we showed a good example of how we care about people that we forced to stop working with, and that motivated those who stay in the company by simply respecting our decisions, our transparency, getting our trust, and see how nicely we treated others. So they know whatever happens, even with them, they will be fine. And that actually increased motivation and made us as even much stronger and more trustful family than before.
Okay. And when it comes to level of transparency, are you like extremely transparent? So you say, hey, this is, how much cash we have on our balance sheet. This is, how much we need to cut costs. So like almost, like the level of information across the organization in that time is, leveled between almost the whole organization.
Yeah. So we didn't say how much exactly cash we have. We just said, okay, so we have cash runway. We need to double extend that. And that means we need to double down on our existing burn rate. And so this is the initiatives that we do in order to decrease our burn rate significantly, and layoffs is one of those, and then everything else, and then each department focusing on specific things that will decrease the burn, and they all were kind of understand for whether if their department will not be able to decrease burn here, they're going to be further cuts. Okay. However, thanks to that, it helped us to keep the talent and decrease burn in other ways where they know whether they do it or somebody will need to leave.
Okay, sure. Alex,
chime in on that. So we chose to be fully transparent with our cash position and runway in both cases during COVID and the last couple of months. So basically, that was part of the communication strategy. We said, like, this is how much cash we have left. That's our burn today. This is where we need to get by the end of the year. And that we want to get to break even mid next year and be able to control our destiny. And I believe that was the best way to show the rest of the team that stayed with us, that they can feel secure. Because otherwise, like, there would be rumors and questions whether we are hiding anything. So during COVID, for the first 6 months after the layoffs, every single month we had an all-hands call and we communicated the progress that we made, how much cash we had left, and what our burn was. And right now we'll probably be doing that on a quarterly basis, but we are also very transparent with that as well.
Okay. Alex, I mean, you agree or not, or do you have anything to add to this?
In general, for us, we have this thing, we're trying to create P&L literacy, so everybody knows the P&L and understands how they help from their role and how what they affect and what they don't affect. And like, I will not repeat the same thing, but being fully transparent is super important in tough times. The one thing is that for me, you don't build this last minute. You need to be transparent from the get-go. You need to be transparent as a team culture. If you have a toxic team culture and you suddenly try to be transparent or you try to fake it, might backfire. Another important thing for us during COVID was transparency towards our customers, towards the travelers who were affected. So that was also important. Also transparency towards our investors. And again, the relationship, you need to have built it before and not try to build it at that moment. Regarding external transparency, I have a contrarian view. I mean, I feel that there is a lot of cancel culture going on the last couple of quarters and years, and it's you need to be careful. If your communication seems a bit too cocky and to try to reverse things to show that it's a good thing, and you're not playing it right, it can backfire a lot. So I would be very careful with external transparency and kick it in whenever it's needed. Internally, we're fully transparent. We help the people find their next gig. We overreach to make that happen. But being trying to publicize this, trying to make it as a benefit and an advantage, it might backfire in your hands.
Okay. And okay, so moving maybe to another question, which we also a little bit touched already. So how do you incentivize, you motivate your key employees, but also junior hires during this time? Yeah. So, they see this all big companies letting people off, probably there will be some let-offs as well. There need to be, adjustment to the strategy. So how do you, try to keep the most important people and best hires on board? Alex, do you want to start?
Sure. Regarding buying, before any announcement for us, it was communicating with the people who stayed, making sure that whoever stayed actually is going, to be on for this journey. They're going to be happy, to go through this phase with us and all that, before making any announcement for who goes, who stays. Or
I think we lost Alex. Stas, do you maybe want to take over, and Alex will continue when he joins back? Apologies.
As you mentioned, we covered a little bit in my previous response. The most important here that I didn't know actually, we simply showed a really good care for those who leave. So we gave them 2 months as paid. We gave them equipment. We gave them help with transition to other companies. We actually did a lot. I personally wrote a lot of LinkedIn recommendations to people there, and I actually sent a lot of emails to other companies I know that we worked with who might benefit from our talent. And all this, we did a good job with talks as well. All this helped others to see our intentions, our good behavior with those who we forced to stop working with, and that actually motivate them to respect us more and be trust more and actually work more in the result.
Okay, Stefan.
Well, I can just second what Alex and Stas said. However, wanted to emphasize one thing that Alex mentioned. It's during difficult times, even when you start acting like your behavior is good and you show care of the people both that stay and that you let go. But if it's different than what your culture was before, it creates this disconnect. So I think what is critical is that like you build that culture during the good times. So when bad times come, like you can be consistent, you can be, you can have integrity, you can maintain your integrity, and you can pretty much behave the same way when you make the decision. So building a value-based culture during the good times is actually critical to go through tough times, without being caught off guard, or like without anybody, saying you're dishonest and that you are changing your narrative or your behavior because now, you need to change it because of the market behavior. So I think investing into the company culture early on, when everything is good, is critical to help survive and thrive during difficult times.
Okay, fully agree. I think Alex is still not here, so we can maybe go to another, let's say, part of our discussion, which I wanted to, touch upon your relations with the investors, fundraising, etc., in tougher economies. So first, maybe putting us as investors on a spot a little bit. What do you think about, cooperation with investors during, harder times? Were they more supportive? I would imagine, they wanted to know more. So like they wanted to have, more communication with you, but like, did you see the support and, day-to-day communication?
You want to start?
Yes. Maybe Stefan?
Okay. So I think investors are a little bit like parents. And in that sense, like there are two segments of parents and two segments of investors. There are parents that want to raise healthy, strong kids who become strong adults and who can control their lives and be, independent and healthy and happy. And then there are parents who, for whatever reason, they were not able to, accomplish certain things in their lives. And now, they are making their children to do the things they were not able to do, or, because they made certain mistakes, they want to ensure that their kids didn't make those mistakes. And like sometimes they enforce them to make decisions like, oh, you need to be a doctor. Like in these times, it's the best and the safest option for you to be a doctor. You will always make enough money. There will always be sick people. Like you need to be a doctor, even if the kid is going to be unhappy or not. Like if the kid doesn't, it's not built to be a doctor. Like if the kid is like, a free spirit and they want to be a musician or an artist. And I think, the same thing applies to investors. There are investors who obviously want to help you, who want to be there, have your back, guide you, help you out if you ask them for help. But then there are some investors that are crossing a thin red line and are very prescriptive and are telling you what to do. And I think it's toxic because, we are entrepreneurs and we need to make our own mistakes and we need to learn from those mistakes. And obviously, we should ask investors and other founders, for help and ask them to share their experience. But at the end of the day, it's our call. And I believe that, when you invest, obviously you look at the market, you look at the opportunity, you look at product market fit. But I believe the most important part is the team. And either you trust the team that they are going to make the right decisions. And if you don't trust the team, you should not be investing into that team. And if you don't have trust, then you start crossing this thin red line and this is toxic. So like, this is my view on the investor company relationship, especially during the hard times. So it's crucial, like when you actually fundraise and when you get investors, even during the good times, that you do a background check on them, that you talk with other founders, that you check how the investors had behaved during difficult or crisis situations, how they coped with that, whether they supported founders, because sometimes they think they are supporting and they are hurting the founders and the company. And kind of like building the culture, it's way more important how you build the culture during the good times, so it helps you during the tough times. And I think it's the same when you pick the investors during the good times, you need to make sure that they are going to have your back and they are going to let you run the company during the tough times, because ultimately it's your responsibility as founder and CEO, not theirs. I mean, they are investors, not operators. If they want to run a company, they should run a company, not invest.
Yeah. Stas, what's your idea about this and, experience with your investors?
I totally agree with Stefan. There are two kind of investors: the ones that pain in your ass, and the others that actually do care and can help if you need that. So I appeared in a situation where we actually needed help, and thanks God we got actually Lucas from your team and guys from Andreessen who have really good experience in the subject that we needed, and we actually worked as a team together. And I think that was a really amazing time. When you need help and you have right investors who are actually helping you in that with their experience and actually with their even not cash investments but time investments, experience investments, which is even much better than cash investments. But the ones who actually be toxic, I have a good advice how to deal with that. So I'm just trying to be abusive with them. So if somebody wants to, involved and give their help that you actually don't need, I try to be super abusive and like, okay, cool, help me with that, and I need that, and that, and you can now do it on your own. And then after a few a few tasks that you give them, they're like, what about, how about you will do it? And like, yeah, I'm doing all that. Thank you very much. Let me know how else you can help, and I will give you that task. And then they like, okay, sorry, I don't have that. So that helped me a lot to simply be abusive of that, and they stopped doing that in the future.
Okay, Alex, sorry, you were disconnected. I was asking, about your relationship with investor during tougher times. Did you get support, or how did it look in terms of cooperation? And what's your idea generally about this? How should it look like?
Again, for me, it's like with the team. You cannot, suddenly build a different relationship under tough times. Like you need to work on this beforehand. Like as you are working on your team structure, you need to work on your relationship with your investors. They need to see and they need to have transparency from before, and they need to trust you in order for you to be the main operator who runs the business. In tough times, all this is more stress, more anxiety, more everything. It needs more communication and more constant communication with the investors. And for sure, it's a time where investors will push for better, deals if they can, because you're under stress and time is running out. So as much as you can avoid that, the better. And in general, founders talk, and whatever pressure you get, it remains. I mean, it's not something that will stop, let's say, and everybody is working on their karma and on their, let's say, long-term personal credibility, let's say. So the more you get pressure on that, the more the credibility gets pressured of other people. I mean, and for a founder to be very transparent in a crisis, to not hide things from investors, and be as good as he should be, he will help him not only in this venture, in the next venture, in his life,
I think Alex froze again. I can see we had some problems. Hopefully he will be back again. Okay. Okay, I see he dropped. Okay, in the meantime, we got question in our Q&A. Happy to ask this. I like this question. An important thing in leadership is leading by example. So how do you think founders should lead by example in crisis times and times of belt tightening? Stas, do you want to start?
This is a really good question. And I think it's always different for everybody. But the most important that I see it's being optimistic and trying to show in your own example how, for example, you getting some work to be done on yourself. You're getting these tasks publicly, and you're showing how you're getting this done, or you're showing how you're getting other employees working with you. You're simply showing how you work and how you care about the company, how you care about your tasks, what is your attention to details, which is really important. Basically, all cultural things that you have that you care about, you show in your own example, and I think that actually improves the value of your values in the company or cultural values by your own example. And this is how you're pathing things, because you cannot just say, you cannot have values and culture in the company that you not following on your own, and then just simply when you're working and you put exclamation mark on this specific things and show how it should be done by your own actions, that actually I think being a good signs of leadership, and why people should not. I think a good leader is not the one who is being followed by order. I think the good leader is the one who is followed by desire and respect.
Okay, Stefan. So how you manage, leadership in belt-tightening times?
I don't think anything really changes for me. I mean, you have to lead by example during good and bad times. And there are certain things, we have always been doing as a company, even though we, maybe spend more on marketing in the, in the good times than we are spending right now. And like our strategy, as I mentioned, it hasn't changed, but we are now having more focus. Like we never had excess spendings, like we never traveled in luxury. We never paid. I never paid out any bonuses to myself. Like I never lived a lavish or luxurious lifestyle. So I don't have a problem, leading by example right now. Like I don't need to, cut my spendings because I've always, had pretty modest spend. In fact, I was told by our accounting, and that was a long time ago, that I'm probably the most rigorous person when it comes to submitting invoices and receipts. So, you have to lead by example, not only during the bad times, but you have to do it during the good times. And then, when you go into the bad times, like you don't really have to think about what to change. You just do you.
Yeah, sure. Alex, we got a question from, sorry, we lost you. We got, Alex is again. Let me ask this, maybe if we have enough time later. So maybe going back to, to the question about investors. So the market is, harder in terms of raising capital. Obviously, multiples are lower, etc. So given this, what's your strategy for and advice for fundraising in terms of, dilution? Do you think raising capital is like extremely important now? And, if there is a red line in terms of, valuation structure or other condition you'll get, should you put there this red line for yourself and, say, okay, I might not fundraise in this environment. Let's better do something else. So, Stefan, do you want to start?
Well, I think there are two kinds of startups, those that can get to break even, and they are the lucky ones. If they have enough cash to break even, either by reducing cost or cost base or growing the top line or doing both, then obviously they should do everything they can to control their own destiny. And then, and this is our approach in this environment. Like, we are big enough and our revenue, our top line growth is, big enough that we believe we can easily get to break even. But obviously there are startups that are in much worse situation because they are much smaller and they won't be able to get to break even. But if they still believe that this is a good business, then I think raising at all costs is probably, the most reasonable thing to do. It doesn't matter how much you dilute, because what's the alternative? You go bankrupt. And this is a sad reality, but this is the mind shift or mind change some founders probably need to go through and be okay with that and be comfortable with that. I mean, that's how we felt when we were a much smaller company, and there were a couple of tough moments and we didn't get that many term sheets, and we just accepted back then, we accepted the terms we had, and that allowed us, to stay in the game, to grow, and to be where we are today. So, sometimes you raise with exceptionally good multiples, and the other day you raise with low multiples. I think it all averages out, when you look through 8, 10, 12 years cycle, because like on average, for successful companies that go public, this is probably how much time it's going to take anyway. So I wouldn't worry about one round on low multiples, because in the next few years you will raise with high multiples and you will have a good exit anyway. And if you go bankrupt, it doesn't really matter.
Okay. Stas, what do you think?
Yeah, again, as always, it's good to be on the same page with Stefan. However, he divided companies for two types, the ones who come into break even and the ones who are not. In our case, I would divide companies to the ones who are actually sexy for investors and attractive, and the ones who are not. So the ones who investors want, you got lucky. No matter what is your growth or your other things, they want you. So yeah, it's good. And most likely for you, valuations will not be smaller. Like, they simply want to invest and you got it. Or the ones who actually investors are super picky and they don't feel confident about you. And unfortunately, during bad times, there are more companies like that, investors much more picky. So if you're in this position, definitely just accept that and focus on profitability and cash burn things. That's it.
Okay. Alex, you were offline. I will maybe ask you two questions that we missed with you. The first one, we got into Q&A. So an important thing in leadership is leading by example. How do you think founders should lead by example in crisis times and times of belt tightening?
Yeah, I mean, again, it goes back to transparency and being fully transparent with your team and your actions and why you're taking every action. I mean, leading by example, for sure, is something that every leader will tell you he does it. But yeah, I mean, when you're going in the cost efficiency spree and you're trying to look at cost management, like, I was the first one that I lost my office that I had like almost right before COVID, and like I went back to, and like we had to sublease our space to other teams in order to make things work. And like you need to do these things. Like I don't have any specific point. And like it's self, it goes without saying that under tough times, leading by example and doing the things that you expect first is the most important thing. Okay.
And the second question, just the one that Stefan and Stas answered, is what do you think, as valuations contracted now, but still some startups need to raise money, some not necessary, but still might, think of it. Do you think there should be a red line in terms of, how much dilution you want to take, or in terms of structure or other conditions you'll get in your term sheet? So, what's your approach on that?
Yeah, I mean, you need to have your red lines as a founder. I don't think you should just go ahead and like put your head down and keep on going without any negotiation, without any red lines, just because you have a sunk cost that is like the company that started like that you need to see through. I mean, you need your red lines, and they need to be respected by the VCs, and you need to have a plan B. And by having a plan B, it helps you on your plan A and on your negotiations. So if you can avoid, like if you have good relationship with your investors, you can avoid that part altogether. But if you have to do it, like you need to set your limits, in my opinion. And things like liquidation preferences and things like that are very tricky and very interesting when they being discussed under pressure. But yeah, I mean, have your red lines, have a plan B, and actually these will make you even more confident for your plan A and for your like negotiations. See,
Okay.
in my opinion.
Okay. Maybe, I mean, we are almost run of time. The last closing question, let's say like that, to each of you. So what is one, I hope, positive, like crucial piece of advice you would give to founders during, slower economy that we're in, and there is big chance it will take some time to recover from. So, Stefan, you want to start?
I saw this quote, or I don't know if study is a good word, but basically what it said was that the best startups are created during downturns. And I think it's a very optimistic and positive news. And from my own personal experience, I've always had the best ideas, and I've always made the most progress with all my companies I have had in the past 22 years during crisis situations. So as Alex said, don't let a good crisis go to waste. I don't know why I get the most creative. Maybe like being pushed against the wall is something that, that I've been wired with and that works for me. But, downturns and bad times have always been very productive for me.
Okay. Alex, maybe you?
Yeah, I will repeat this phrase that stuck in my mind, which is never let a good crisis go to waste. Which is I'm talking as a survivor, I would say, because travel was in very deep troubles the last 2 years with COVID, and this year and this summer specifically, it was like when things came back, when like bookings came back, when normality started to come back. And I can like speak more like a crisis veteran now, like with the crisis on my back, which is, at the end of the day, right now we are EBITDA profitable, we're growing, we have an unlimited runway, things are looking good, and definitely COVID played this role, and we definitely, used COVID to get there, and like to see the next day with much less stress, much less like push for like results and all that. And it's more like, okay, where do we want to go? Where do we want to go with all the money we have in the bank, with the plans that we have for next year? And it's very interesting and very nice place to be after a very, very bad crisis. So never, let a crisis go to waste. Like I saw this crisis more like a mini MBA on crisis management, and it was very useful and definitely something I would keep as an experience.
Okay. Stas?
Agree with guys again, but all the crisis usually starts with bad expectations from fucking everybody. Everybody tells you what you need to do and be prepared for these bad times. It's gonna be hurt you. You may die, whatever. However, as guys said, if it's not your first crisis, you actually accepting this with your open arms, and you actually expecting putting only good expectations, where you can see, okay, cool, finally times where I can cut expenses with good explanations. Finally times where I can show investors that, okay, now let's not focus on growth, but focus on these things because of the crisis. However, and you don't need to listen to feedback that, hey, no, growth is more important. Like, guys, it's crisis. Let's focus on this. And this is a good opportunity, especially if you're facing them with good expectations inside your mind, and you're super transparent within your team, and it's all new opportunities that lays ahead within those times. So after a few 2, 3, or 5 crises, you as an entrepreneur, you actually finally good times. Finally, we're going to do something interesting.
Okay, great. Thank you for the answer. We are out of time. I want to thank you for. I thank you for as founders for taking your time to participate in that panel. For me, it was a pleasure to have you here today. I want to thank our audience and attention. I hope everyone enjoyed it. I think this video should be posted in our social media after the meeting. And I hope, to the audience, I hope you will join our next events. So thank you once more, Stas, Stefan, and Alex. I wish you all good day or good evening, and thank you. Goodbye.
Thanks, everybody.
Thanks, everybody. Bye.
Bye, guys.